We will cover each and every point in more details one by one. First, what is accounting? When we start any business, we expect some profit from it. A businessman is always interested in earning more and more profit. He keeps the record of each and every business activity dealing in the book of accounts. These daily activities, dealings, events in the business are called day-to-day business transactions in professional language. This process of day-to-day recording of business transactions is called accounting. So, accounting can be termed as recording the day-to-day business transaction in the books of accounts. The next point is different terms and concepts used in accounting. The first term is account. What is an account? We have studied that accounting means systematic recording of business transactions. So, an account is termed as the systematic record of every item related to business. The next term is business transaction. Every business is a combined effect of different transactions, namely business transactions, goods purchased, goods sold, received cash, paid cash, etc. So, business transaction means any transaction which is directly related with the business and which affects the profit or loss of the business. Example, goods purchased, salary paid, etc. The next term is cash transaction. A transaction in which goods, assets or services are purchased or sold against immediate cash is called cash transactions. Next, credit transaction. A transaction in which goods and services are purchased or sold on credit, namely certain value of the goods and service is payable or receivable in future, is called as credit transaction. Next, goods. The term goods means articles, commodities, things that are regularly sold and purchased in the business. The business and its profit or loss mainly depends upon the sale and purchase of goods. Next term, assets. They are valuable and realizable which can be sold and used to raise funds for business properties of the business. Everything owned by the business and that can be converted in funds in an asset of the business. Next is liabilities. The amount payable to other parties from the business. Example, amount payable to creditors, bank loan, payable interest, etc. Next, capital. Investments made by the owner into business. The investments can be in terms of cash, goods, assets, etc. In accountancy, capital means the amount or loan given by the businessman to the business. So the capital is treated as a kind of liability, the amount payable of the business. The next term, debtors. A debtor is a person who owes money to the business, a person from whom the amount is due to the business. Next is creditors. A creditor is a person to whom money is owed, a person to whom amount is to be paid from business. What is the concept of double entry system? Accounting means systematic recording of business transactions. The system used for recording transactions is known as double entry system. According to this system, every business transaction affects on minimum two accounts of the business. Example, goods purchased for cash. In this transaction, we are receiving the goods, but at the same time we are paying the cash. The next term, debit and credit. While accounting, namely recording the business transactions, the expenses and incomes are recorded in two different parts or sides of the account. Each account has two different parts or sides. The left side indicates debit and the right side indicates credit. Example, cash receipts and cash payments of the business are recorded in cash account. Cash receipts of the business are recorded on the left side of the cash account, whereas cash payments are recorded on the right side of the cash account. If any transaction is recorded on the left side of the account is termed as account is debited, whereas if any transaction is recorded on the right side of the account, it is termed as the account is credited. The debit and credit is decided on the basis of some rules of double entry system. The next term is financial year. Financial year begins from 1st April and ends on 31st March every year. Salaries. Amount paid to staff person is known as salaries. Wages. Amount paid to workers on daily basis is known as wages. So we have just covered the different terms and concepts, as these terms are very important while learning Tally. We will further see now which are the types of accounts. The first one is personal account. In this type, accounts of all persons, namely artificial and natural persons, are considered. Artificial, namely legal persons, persons created by law, example banks, companies, cooperative societies, trust, etc. Natural persons, living persons means a human being, example Mr. Safim, Mr. Ujwal, Mr. Praveen, Mr. Razi, etc. The next, what is real account? In this type, accounts of business properties, assets are considered, example cash account, furniture account, building account, goods account, etc. The third is nominal account. In this type, accounts of expenses and incomes of the business are considered, example salary account, rent account, interest account, commission account, etc. What are the different rules of accounting? As per the first account, that is personal account, the rule is debit means the receiver or debtor, credit means the giver or creditor. We can just clear this concept through an example. See here, goods sold to Mr. X on credit. X is the person name, so we will just pick up the personal account rule to pass this entry. See, X is a personal account. According to the rule, X received the goods. He has to pay the amount to business. He is the debtor of the business, so give debit to X account. Goods purchased from Mr. Y on credit. Here we have goods sold, but if you see the entry goods purchased from Mr. Y on credit, two accounts concerned here are goods and Mr. Y. Y is a personal account. Mr. Y is the giver of the goods. The business has to pay the amount. Mr. Y is creditor of the business. According to the rule of personal account, give credit to Y's account. So we have seen how to credit and debit as per the personal account rule. Now further we will see about real account. First, the rule is debit means what comes in, credit what goes out. See with an example, goods purchased from Mr. Y. Here goods account, namely real account, and Mr. Y's account is concerned. The transaction will be recorded on goods account. Goods are purchased, goods are coming in the business. So according to the rule, debit what comes in. This transaction will be recorded on the debit side of the goods account. If you sold the good to any person, goods and Mr. X account is concerned, goods account is real account, goods are sold, goods are going out of the business. According to the rule of real account, credit what goes out. This transaction will be recorded on the credit side of goods account. The last one is nominal account. Debit all expenses and losses, credit all incomes and profits. This is a rule of nominal account. Now with an example, salary paid. See, one aspect of this transaction will be recorded on salary account. Salary account is nominal account. Salary is paid, so it is the expense of the business. According to the rule, debit the expense, salary account will be debited. Commission received. See, here is the income. One aspect of this transaction will be recorded on commission account. Commission account is nominal account. Commission is received. It is the income of the business. According to the rule of nominal account, credit incomes and profits. This transaction will be recorded on the credit side of the commission account. So in this video, we have cleared the concept of manual accounting, the rules of debit and credit, the types of accounts, the terms which are used in accounts department, and what do you mean by accounting. Next video we will start with Tally accounting package.